In this video, I'll analyze the Q1 FY26 result and Concall of DP Abhushan. And after watching this video, you will understand why reading Concalls and tracking companies are important. Because if you look at their result in Q1 FY26, they are really average. Okay, but when you read, if you read their Concall, the whole perspective about this company will change. So that is the point. So let's start with the company overview. DP Abhushan is a MP based B2C gold jewelry company. They have 11 stores in total. 6 of them are in MP and 5 of them are in Rajasthan. Okay, and they mainly open stores in the tier 2, tier 3 cities. And going forward in the next 2-3 years, they are also looking to expand in the state of Gujarat and Chhattisgarh. So that is the company overview. So let's talk about the result of DP Abhushan in this quarter. So let's start with the store expansion, which is the most important thing now in this company. In total, they have 11 stores, and in this quarter they opened one store. Okay, one store, and their plan is to open another 6 stores in FY26 in the second half of the year, in the time of like the festivals, Diwali and all. So that is their plan, and out of 6, 5 will be in the format of small format, like 4,000 to 5,000 square feet format, and one will be a large format store, which will be around 8,000 to 9,000 square feet. So that is their plan. And going forward in FY27, they will open another 7 stores. So in the next 2 years, they are planning to open 13 stores. And what is their long-term plan? Like FY30, they are looking to open. They are looking to increase their store count to 50 by FY30. So that is their plan. So we can say in the next 5 years, they are going to open another 40 stores, which translates around 40% CAGR for next 5 years. So that is a very good development that happened in this company. And so why are they suddenly looking to expand so much? The management is saying that in the last 5 years, they have opened only 6 stores. But now they feel that their brand is strong enough to do the expansion. So that is why they are like trying to expand their footprint. And if you look at their conversion ratio, that walking to purchase ratio, that is at 85%. What it means that if 100 people are coming in your store, 85 of them are ending up buying something from your store. So 85 is a very good number. So that is one point. And another point is that the repeat customer. If you look at their old stores, the repeat customers number is 70%. 70% are repeat customer, and in the new stores also they are getting 40% repeat customer who like purchased gold and gold jewelry or any jewelry from like on other locations. So that is why they are saying that they are very confident that this is the right time to expand their brand. So that is the very good one. And if I say really, customer conversion ratio at 85 is very good. So that is the point here. And how will they fund this expansion? They are planning to raise a 600 crore of QIP in the month of August, and that is how they will fund their expansion. Okay, they are saying that all this 600 crore rupees will be used for expansion only. So that is another good point. And if I talk about the per store capex for smaller stores, 4,000 to 5,000 square feet, the capex would need around, they would need around 50 crores of inventory and around 2 to 3 crores of capex, means the interior and all work, and 50 crores of inventory for smaller store. And for the larger store, which is around 8,000 to 9,000 square feet, they would need around 100 crores of inventory and 5 to 7 crores of capex to build a store. As we all know that in a jewelry business, the main thing is inventory, and where the inventory is high, it is pretty normal that you have to show the jewelry, your collection in your showroom. So that is why the inventory here is pretty high. So that is the thing. And the geography they are looking for is that I said that they are looking to expand in the state of Gujarat and Chhattisgarh, and they also have identified some small towns in the state of Maharashtra, Madhya Pradesh and Rajasthan. So that is another thing, the geography they are looking to open these stores. So in terms of the store expansion plan, they have a really good plan. Okay, so that is the point. And in terms of the revenue, in this quarter revenue grew by only 7%. Okay, if you look at their numbers in the past few quarters, they have been pretty good in terms of the sales growth. Only in the Q4 their sales growth was at 29%, but before that they were growing at a high pace. In this quarter they grew their sales by 7%, so it is a little bit low, little bit below average, I would say, I would like to say. But the guidance they are giving, that they are giving a guidance of 4,500 crores of revenue in FY26. And if we look at the FY20 number, they did a revenue of 3,300 crore. So it means that in the year FY26 they are looking to looking for a growth of 35% over FY25. So in terms of the revenue growth guidance, it is more or less pretty good. If they can able to achieve this number, it is pretty good. And for FY27 they are giving a guidance of 6,000 crore, which is around 25% increase over FY26. So in terms of, it is a till there is some time to reach like FY27, so they can increase their number, because it looks like a little low, because they are planning to expand to like 17 stores in FY26, then another 7 store in the next year. So that is the point. So but for FY26 they have a decent kind of a guidance. Okay, so in terms of the SSSG, in this quarter their SSSG was at minus 4.8%. so SSSG was little low, I would like to say, but if we look at their guidance, they are saying that from these new stores which will be there in next few months, they will generate 600 crores of revenue for the whole year FY26. So if we calculate it, we can have a SSG of 18% for FY26. So going forward they are expecting a good kind of a SSG, so that is a good thing. And if I talk about their gross margin, in this quarter, if you look at their gross margin increased by 400 bps year on year and 500 bps quarter on quarter, but it is mainly because of the gold increase in the gold price. Okay, because they do not hedge their inventory, that is why they have their gains in terms of the inventory, and that is why the gross margin was higher in Q1 FY26. So that is a point. But if we look at their plans going forward, they are looking to introduce hedging in their company. So this will protect their margins downward. Obviously the upward movement, if the gold shows any kind of upward movement, the benefit will not be there, but it is good for a company. So that is the thing. Till now they were hedging their inventory by weighted average inventory they were using mainly, but that is not a hedging for say, but they are looking to hedge their inventory going forward. And going forward also, if we look at their margin, where it can be, their started ratio is at 60, their started ratio is at 6% now, and going forward to FY30, they are looking to increase their start ratio to 15%. So in terms of the start, as we all know that the margins are higher in the studded jewelry. So if they can able to reach that number of 15% by FY30, obviously their margin will be higher. And another one thing that they are introducing 18 and 14 karat gold jewelry, and in 18 and 14 karat gold jewelry also generally the margins are higher than the 22 karat jewelry. So that is another point where they can increase their overall margin. So in terms of margin, you can expect a increase from here only because of the start ratio, because of the introduced 18 and 14 karat gold jewelry. So that is the thing. And if I talk about the EBITDA, in this quarter they increased their EBITDA margin by 250 bps year on year, and quarter on quarter it increased by 400 bps. Obviously in the EBITDA margin also that flow have come of what they said, that the increase of the gold prices. So EBITDA margin was mainly fueled by the gold price increase. That is the point. But yeah, they have a good kind of a increase in terms of the EBITDA margin, and going forward I am expecting a better EBITDA margin because of the, as I said in the gross margin also, that the start ratio is going to increase, the introduction of 18 and 14 karat gold jewelry. So that is the thing. In terms of PAT, they grew their PAT by 45% in this quarter. So they got the operating leverage, mainly because of obviously the price of gold have increased in this quarter. So in terms of PAT, they grew their PAT by 14%, which is a decent kind of a growth, because they are consistently getting the operating leverage in their business if we look at last year also. So that is the point. And in terms of the whole company, if I say, I would say that the expansion plan is very exciting. In the next 5 years they are going to open 40 stores, and the guidance of revenue for FY26 also very interesting, 35%. So let's see what happens. I am expecting as I said, the sales can grow at a higher pace, the margins can be higher in the coming quarters, and then obviously the new stores are coming. So as a company it is going at a right direction, but yeah, we have to see that where the all parameters are going in the next few quarters. So that is the point I would like to say about DP Abhushan. But let's see what happens. Let's track the company, and that is why I said in the opening at the starting of the video that if you that why the reading of Concall, tracking company are really important, because you do not know from where which company is going to increase their plan, increase their capex, increase their store. You do not know, but you have to read the Concall to know it and track the company. That is the main thing. So let's see what happens in the coming quarters. So that's it for the video. Thanks for watching.